Did you know that nearly 75% of small business buyers are purchasing their first ever home? And while half of startups fail within the first 5 years, buying an existing business can significantly increase your chances of success, but only if you do it right. But before you sign on the dotted line, you need to make sure that you're buying a solid business, not a ticking time bomb. So, whether you're looking for a strategic investment or a passive income stream or a way to escape the 9 to 5, buying a business can be life changing, but only if you perform the right due diligence. In fact, 60% of business purchases involve some form of financing, meaning you'll need to prove the business is worth the investment before bankers or sellers will back you. So, what I'm going to cover today is I'm going to give you a pre-offer checklist to help you decide if a business is even worth pursuing. And then we're going to go over a due diligence checklist to ensure you're making a smart, profitable decision before closing the deal. So if you consider buying a business or just want to understand the process better, stick around. And if you find this helpful, be sure to subscribe and comment below with any questions that you have. So let's go over the pre-offer checklist. So this is when you're in the negotiations phase of things. One of the things that you'll want to understand is, why is the seller selling their business? Why is the business for sale? Like, you really want to dive deep into that. Like, is things going downhill? Have the financials been going downhill? And they're like, you know what, I'm just tired of working in it and I don't want to do it anymore. Are they wanting to retire and maybe relocate, spend time with grandkids, start enjoying life? Or is the industry maybe in trouble? I actually was talking with a client of mine, and she sold her insurance company. And she's like, I've been seeing the writing on the wall for a while now that the it's just not working. Like the who she was under, the main people, the main insurance people that she was under, like they kept on changing the commissions on them, and it wasn't good. So she's like, you know what? I'm going to get out why this is still a viable business and I can sell it for what I want to sell it for. So really dig down and talk with that seller to find out why they're really selling and see if they're telling you the truth. Okay. So then know that you're not going to be buying a job. Like, there has to be enough revenue in that company to be able to pay for possibly a manager to come in and run that company for you, and for you to be able to pay any debt, and for you to be able to get owner's draws or be able to pay yourself a wage. So when you're buying this, know what you're getting into. Like, do you have to go in and be the manager? Can you hire someone to do that? Are there employees there who can do that already? Or is sometimes the seller, they want to sell, but they just maybe want to be on part-time or be on a consultant basis. So find out, what their involvement's going to be afterwards. And sometimes, like, they'll be on a consultant basis for, say, 3 months or 6 months during the transition period, just to make sure that none of those clients are leaving you, to make sure that it's a smooth transition. So that's another thing to keep in mind. Like, if they just want to be out, then that means the price isn't going to be as much because they're not willing to work with you on transitioning. And if they have employees who can completely run it, that is even more ideal because you don't have to bring in someone to manage it. They already have the employees there to do that for you. Okay, and then once you have this information, go ahead and compare it to an independent startup cost. So if what we're doing is we are buying already a book of business that's already fully operational, should be profitable, and the clientele should be there. So compare the purchase price of that compared to what it would be like if you started this thing from scratch. What fixed assets do you need to get? Is there a building that you need to get? Are people working remotely? Um, like, how much would it be to rent a lease space out, and all the startup costs? And then remember, like, businesses, like, you're lucky if you're breaking even at year 3. And Remember, I told you at the beginning of this, 50% of all small businesses fail within the first 5 years. So you need to make sure that this is going to be profitable if you're going to start it up from the very net zero, like from the floor up, right? And then when you're looking at this business, identify your unique value and opportunity. So if you go back and watch my one on selling your business, I told you about the types of buyers. There's strategic buyers. So that's when they're already in the marketplace and they're looking to bring in people in the same, say, competition, vendors. Like they're looking to make a strategic value buy to be able to bring it in for that they can decrease their overhead, make better profits. There's some sort of value that they see in that. Another unique value or opportunity, another type of buyer that would be is like private equity. Obviously, if you're an individual, you're not private equity going in, but you have to be able to see something that you can improve on if you buy this business. Because if they're making a net profit of say 10%, do you see ways that you can cut those expenses so that your net profit will go up? Or do you see ways that you can bring more customers in for that your net income will go up? So just think about that. There has to be a reason why you're buying this. Okay, so number 5 is manage expectations and deal heat. So I want you to be able to know the expectations that you have, know their expectations, and there's going to be some negotiating going on. Obviously, the seller is going to want to be getting top dollar for this business, and you as the buyer are going to want to be getting it for as cheap as you can, right? So there's going to be a lot of negotiations going on there. The number 6, assess industry and competitive landscape. So remember in the insurance, the lady I was telling you about who was selling her insurance business, this is exactly about knowing your industry. What is your industry doing? So if you are getting into insurance, make sure you are thoroughly researching insurance and that you know what's going on. And then knowing who your competitors are. And it's not just insurance, it's whatever industry that you're getting into. Make sure that you thoroughly have assessed the industry. Is it going up? Is it going down? Is it staying steady? And then knowing your competitors and what competitive advantage can you bring to the table for that if you do buy this business, that it's going to be successful. Lastly, evaluate your personal goals and reasons for buying. So that's exactly what it sounds like. Know why you want to buy the business, why you want to get in this industry. What exactly are you looking for? Again, do not get into the business if you're buying a 9 to 5. Businesses are supposed to be investments. So if you're buying a business where you're literally having to go in and work 9 to 9, not even 9 to 5 anymore, and you're giving up that time freedom, financial freedom, it's not going to be a good thing. Like you're going to regret doing this. So make sure that you understand and evaluate your own goals and the reason for buying. All right. So next, we have gone through all of that and now we're seriously looking at this business. So this is our due diligence checklist. So one of the first things I want you to do is I want you to review and analyze all financial statements and tax returns. I would say for at least the last 2 to 3 years. 3 years if at all possible. And if you remember in my selling a business, I told you that I am a big follower of Adam Coffey and also Mark J. Kohler. And for Mark J. Kohler, I'm one of his Main Street certified tax advisors. For Adam Coffey, I've just been to a lot of I've been to a power day where he's worked with me one-on-one or one in a group. And then I've also have been to like 3 of his seminars going over basically selling your business. And he has a rule of 30, 20, 10. And so look at the profit and loss, and is the cost of goods sold 30% or less of income? If it is, check, keep on going. The next one you want to look at is your total operating expenses. Is that 20% or less? If yes, check, you get to move on. And then the net profit, is your net profit at least 10% or more? If it is, check. And let's move on. Another thing I would have you do is I would highly recommend either getting with someone like me or a CPA and having them review those financials. Because yes, you may be able to look at them, but do you really know what you're looking at? Can you be able to spot anything that's fishy or out of the norm? Are they good financials? Like those are things that you'll probably need help doing, because most small business owners, they're really great at running their business, but they're not really great at the numbers or looking at the financials. Some business owners don't even know what the financials mean or what to look at. That's why you need experts like myself to be able to come in and help you with that. It's nothing to be ashamed about. It's just you weren't taught that, and until you're looking at them and going over them all the time, and you might not be able to see if it's a good company or a company that's like a ticking time bomb that they're trying to get rid of because they know it's on the downhill, right? The other thing that you want to look at in the financials is look at year over year over year. Are the financials, is the net profit increasing? Are the sales increasing? Like you want to make sure it's on an upward trend instead of on a downward trend. And then you want to make sure that those financials tie to the tax returns. And if they don't, um, there's something wrong, and that's a red flag. Okay, so another thing you will need to do is do a complete inventory of assets being purchased. And the reason why you want to do this is because you and the seller need to fill out a form 8594 if you buy the business, and it needs to be itemized out of how much are the assets being purchased for, how much are they selling the assets for, how much goodwill is going into it. Just there's that form needs to be filled out, and it needs to be the same for both you and the seller. And that goes on your tax return, the next tax return. Like they will have to put it on theirs when they sell the business, and you will have to put it on yours when you buy the business. And if those don't equal, you're going to be getting an IRS letter. And again, you might need help negotiating this because the seller, they want their numbers to be for that they're going to be paying the least amount in capital gains. And you want your assets to be probably maybe at a higher number because you want to be able to depreciate them. But if they talk you into writing down all of the fixed assets to zero and you're not buying any fixed assets, then you're going to have nothing. I don't want to say nothing to depreciate, but you're not going to have those assets to appreciate at 5 or 7 years. And goodwill is a lot longer to be able to depreciate. All right, so the next thing is you also need to assess the customer base and revenue stability. This is again, like looking at year over year financials and digging into them, like who is the customer base? Like is like 50% of the business all one customer? If you lose that one customer, are you going to be SOL because you lost 50% of your revenue right off the bat? So you need to look at who the customer base is, and the revenue stability. Also examine the employee situation and retention. How long have these employees been with you? Are they going to stick around? Are you able to meet them? Do you have a good relationship with them? Are they quality? Are they doing a good job? So take a look at that type of things, because you're buying the business. The employees are part of the business. You're if you don't like them, or if there's conflict right away and you lose them, well, then you have a brand new business where you lost some of the employees, and now you're going to have to be training. And do you even know what that person did, or can you train on that job, or can someone else train on that job? So think about all that stuff. Next is evaluate existing agreements and contracts. This is for employees, this is for vendors. Just go ahead and take a look at those. When do they expire? Are they good rates? Can you do something more favorable? This is all things to think about. Next, assess and determine the seller support and transition role. So I talked about this a little bit earlier, but does the seller want to get out right away? Are they willing to give you 3 or 6 months of a transition period? Do they want to actually stay on? Like they just don't want the stress of running a business anymore. They just want to be a W-2 employee and kind of be there for you. Like they want to stick around and keep on working because Otherwise, what else are they going to do? So take that into consideration. And does it work for you? You're going to be the boss. Like if this doesn't work for you, like be willing to walk away. If they're not willing to negotiate on the terms that you want, be willing to walk away. Next, consider the competition and complete market analysis. I've talked about this a few times already. Just know what industry you're getting into, who your competitors are, what market share you have before you're buying it. Understand the seller financing options. So I think I talked about this briefly in my last video on selling the business, but there's different ways that you can go about buying a business. One, you could just buy the business outright. You might have to get funding with an SBA loan. You might have to have a down payment. There's other ways to do it. You can be creative. You can maybe purchase half now or have a down payment of half now and then the remaining amount to be paid out over a year or two. And maybe it's not just a flat rate, maybe it's a percentage of how many of the customers stay with you. Especially if you're buying businesses where it's a very service oriented business, because if those clients aren't staying with you, then the value of the business isn't there. So that might be another, I've seen that several times. Or you can kind of get creative. It's not just oh, I'm buying the business for 500,000 or a million or 2 million, whatever it is. And you have to come up with that all up front. Like we can put negotiation terms in there depending on the industry and what the buyer is willing to do and what the seller is willing to agree to. The insurance lady I was talking with you about, she didn't want any money up front. Like she wanted it over the next 3 years because she wanted to be able to go spend time with her family. And be able to, her son's like a junior. She wanted to be able to spend time with him the last few years, maybe start up a new business, but she wanted to have that consistent monthly income coming in so that she could do what she wanted to do while she figured out her new business that she wants to do, but not have to worry about personal cash flow anymore now that she doesn't have a business. So those are all ideas to think about. So the next thing is review all legal documents carefully. Just as the seller is going to have a team, you're going to need to have your own team. Like the accountant, you need to have a CPA or accountant. Here's where you need to bring in your lawyer as part of your team, making sure that legal documents that it benefits you. Obviously, the seller is going to want to benefit them, but there needs to be give and take. And if you don't have someone who understands legal terminologies, like you could get yourself in a lot of trouble if you're not having someone that you trust to be able to look at that. Just how I was talking about earlier, not all businesses are really great at knowing the numbers. Like I would say the legal side of things is probably even worse. Like most people don't understand the legal side. So you definitely want to get a lawyer in and pay the money towards the end to make sure, like if you're moving forward, that it's good and that you're not getting screwed in any way. Lastly, stay objective. Do not fall in love with this business. Do not fall in love with the business. Do not get to the point where you are so invested in this business that you want to buy that if you see some red flags, that you're not able to walk away, because I want you to know there's a lot of businesses out there. In my last video, I talked about only 30% of small businesses that get listed actually sell. So there's a lot of other fish in the sea for you. If this isn't the business for you, then go ahead and be able to step away, walk away, and go look for another business. I promise you, there's going to be one that meets all of the criteria, and it will be a lot better than buying a bad business and then having to go back and fix it. There's too many good businesses out there to buy to get stuck with a bad one. So now that we've gone through both the pre-offer checklist and the due diligence checklist, you're in a much stronger position to make a smart, informed decision when buying a business. Remember, do your homework up front, and it can save you from any costly mistakes down the road. If you're serious about buying a business and want to make sure you're structuring the deal the right way to maximize tax benefits, let's go ahead and talk. Book a discovery call with me using the link below. Also, don't forget to subscribe for more tips on business finance, tax strategies, and smart investing. And if you found this video helpful, hit the like button, drop a comment below. And also, what is your biggest question about buying a business? I can go back and answer some more questions if you need me to. Lastly, I've mentioned my last video on selling a business. The link will be provided below if you want to go back and watch that. And if you have any topics that you'd like me to talk about, please go ahead and drop them in the comments. I'm always looking for new topics that my followers want to have me talk about. Next week's topic is going to be on the S Corp and what are the advantages and disadvantages of an S Corp. So stay tuned for that. Thank you.